Hi, welcome to Tales from the Sky Lounge. It's a podcast about business, consulting, and venture investing. We get out there in the world and we talk to people who are making it happen and we get their stories. If you could like and subscribe, it really helps us get our word out. Today's guest in the Sky Lounge, Michael Weinstein. Hi, Michael.
Hey, Todd. How are you today?
Hey, doing awesome. So, Michael, who are you and what are you working on?
So I work as a fractional CFO for a bunch of companies as a partner in a firm called TechCXO. And currently I have a range of customers who range from a family business in bakery delivery services through to a healthcare AI startup and a couple of things in between.
Very cool. And you've had a career in New York or in and around Wall Street for a long time.
Well, my career is kind of funny, Todd. So I really started my career in corporate planning at Anheuser-Busch in the early 80s when I was in graduate school, where I sort of got all the beer I could drink for free. And I left that and went to work for a steel company in Chicago where I got all the steel I could eat for free. And I'm still working on that first pound. And I left Inland Steel in Chicago and went to work as a strategy consultant for Arthur D. Little in Cambridge, Mass. And basically spent my time traveling the world doing strange things at steel companies and aluminum companies and for big Wall Street firms. And then I left that. And that's when I went to Wall Street, which I swore I was never going to do, having seen how Wall Street worked as an insider, where I worked for Putnam Investment Management for about 9 years in the 90s into the early aughts as doing all kinds of different things, including being co-head of the investment strategy team, which was interesting. And particularly in times like this when stock markets are trying to figure out what to do. Left there and went to the sell side, believe it or not, which is sort of counter how people do it, to build a bespoke research operation for a boutique broker-dealer owned by Swiss Re, the big reinsurance firm.
Yeah.
Left that to run all asset class research for the U.S. operations of Credit Agricole. And then the GFC hit, and I said, I'm done working on Wall Street. And I've been working as a consultant / CFO for all kinds of interesting companies ever since, and joined TechCXO just to continue to extend what I was doing.
Yeah. A lot of cool things to talk about. But let's go to the economy. You've got a really good grasp on what's going on in the economy and seen it from lots of different angles. So, today as we're recording, stock market's been down a couple of big days in a row. The economy's not great. A lot of people are laying off. It feels like there's a lot of uncertainty in the market, stemming from the regime change in Washington. And then, so everybody feels like is trying to figure out what's going on. What do you think is going on with the economy right now? And then kind of how is the pendulum going to swing back around to happy days again?
So there's a couple of interrelated things I think which people should take into account and to give them perspective. The first is, regardless of who had won the election, so let's try and take values sort of out of this. We had been in a long expansion, which was already fraying at the edges. And on top of that, people were looking for the Fed to start cutting rates late last summer, early fall, as a way of bringing stimulus back into the economy. And that was the consensus view back in July, August. Because for a variety of reasons, the Fed did not cut as much as people thought they were. So you already had consumer confidence was slowing. You had consumer debt parameters were not going in the right direction. Delinquencies were rising. Company investment was slowing in certain sectors, accelerating in others because some of the programs of the Biden administration were now starting to pay off, like the CHIPS Act, because it just takes time to do things, particularly with big multi-billion-dollar investments. They don't happen overnight. Just add water and have a new factory, so to speak. Yeah. So you combine that with a president who comes in and says, I'm gonna change things. And I think there was a lot of people who wanted change and hoped that he would bring change. And And I think of the economy sort of as it's kind of like a computer. It's got a hardware piece and a software piece. And what was Trump really saying is, I'm going to change the software. I'm going to change the rule set as to what kind of outcome that our economy is going to produce. The hard part, I think, for all of us who've watched these things more than once in their lives or in their careers is change the rule set to be what? And that, on top of everything else, brings in a lot of uncertainty. So is the rule, so I think what I would be watching in the next couple of days at least, is, well, not over the weekend. People
yeah. It's Friday.
Friday. Yeah. Is will what's happening on Wall Street cause some things to retreat? In which case, the signal is, as we've done, people talked about the Greenspan put, the Volcker put, the Powell put, which is protecting financiers or financial investors, or are we going to continue down a program which is going to try and alter the economy to be more balanced between labor and capital? And I don't think we know the answer to that. And so what we're in a multi-layered period of uncertainty. So uncertainty as to interest rates, uncertainty as to trade policy, uncertainty as to where the economy is going, uncertainty as what the tax regime is. And I'll come back to tariffs in one more second if I can. Uncertainty about a lot of things. And the one thing we know about uncertainty is that people don't invest. I mean, and corporations don't build new factories, hire people when they're in these kinds of periods of uncertainty. They don't know which way to go. And what the rule set might be 3 months from now, 6 months from now, 3 years from now, and when they have to think in very long timeframes. And that almost puts a pause into things in a weird way, so that, which means that the growth that we'd be investing for in 18 months from now, we're not making the investments today that would under support that growth 18 months from now. So it catches up with you at some point. So let's see, to some degree, I would ignore the shiny object, which is the stock market, and think about what are the real economic metrics telling us, and what are they trying to tell us about what kind of economy they want to have when the noise settles down, right? Look through the noise for what the real signal is.
You mentioned tariffs, and I know you've been involved in several industries that would be highly affected, both good and bad, by tariffs. Obviously, if you are net manufacturer in the United States, that helps. If you're an importer, not so great. What was your thought on tariffs, or how does this tariff announcement change things in the United States economy?
Let's assume they stick, or they're going to stick for some reasonable period of time.
Yeah. Okay.
We just enacted the largest tax increase in the history of the country.
Yeah. Okay.
So I'm a coffee drinker. We import 99% of our coffee from outside the United States because we're not in the right climate to grow coffee. Am I now going to have to pay 30% more for my coffee? Right? 60-70% of citizens in the United States spend all their disposable income on food, rent, or housing, cars, gasoline, clothing. These budgets just got changed. They don't have more money to spend. So the mix is going to change. You can't rapidly replace this stuff. So what does it mean? I keep my car an extra year. I don't buy. We're going to get into back to school shopping season. Johnny's not getting new blue jeans for school this year at the margin, right? Because they're sewn in Indonesia, even though they say Levi's on them, or wherever they're or in Vietnam. I suspect next winter we're not going to be eating a lot of guacamole if this. Right?
Well, it's California. Yeah.
No, it's Mexico. It's where the avocados come from, right? We're in this chicken and egg situation of tell me what the rules are going to be, and we can sort of figure out what happens. In the interim, if I'm a shipper and I got a boat in the middle of the Pacific and I got all these containers on it that have stuff in them from all over the place, and the customs people can't even tell me what paperwork I need to provide them when my ship arrives in Los Angeles port. So you get all these now kind of bureaucratic disruptions, right? Do I send my ship back? Where do I send it to? Am I going to be allowed to unload it? And again, people who are our systems are very highly refined, but which also makes them brittle.
Rigid.
Right?
Yeah.
We saw that when we had the port disruptions during COVID, where we had to change all the transshipment systems and all the problems it caused in the port, right? Because then you don't have longshoremen there, the cranes aren't in the right places at the right time, the drayage companies, people who move the containers out of the ports into shipping yards, they're not there at the right time. They compound them back up because people don't know what they're going to have to do. What paperwork do I have to present the customs guys? It's a very paperwork intensive industry, shipping when I arrive on shore. So you have people, I suspect, which I'm also hearing informally, people are asking a lot of questions because they don't know.
Right.
So it's not like this was a program. Here's the program. Here's the manual that goes with the program. The chance that will cause unintended consequences of this are great. We didn't see 4 other cabinet secretaries at the announcement saying, all right, Secretary of Transportation, this is how this gets managed, or this is where you go. Secretary of Agriculture. Well, right now we know there's grains in warehouses and things like that spoiling because people can't ship it. And we don't know how our trading partners are going to react. Will the EU band together and say, something, we're as big an economy as you, we're not going to blink first. Right. And we know human history is sadly rife with unintended stupidity. I'm not assigning who's stupid. I'm just I'm just saying, right, where people just don't talk to it. Well, there's a great history book. I'm going to get the name a little wrong. Sleepwalking to War, about how World War I started. Right? And it was like people just never thought it would happen, and then it would last 2 weeks. The Civil War, right? It would last 2 weeks, and it would be over, and it was carnage for 4.5 years.
Yeah, generational disruption, for sure.
Because people misread by just not talking to each other. Right?
Yeah. Well, I think there's that short-term or near-term uncertainty, and everybody's got to figure out what's going on. Everybody's smart. There's a lot of really smart leaders. Everybody will adjust. We just got to figure out which way the wind's blowing, and then we'll figure it out. But I think even before this year, even before we knew who the next president was going to be, even before the policies, were going to change, I think structurally we were having trouble in a lot of markets. We work a lot with venture and in private investments, private equity. It seemed like vintage 2019, 2020, 21. Anything that got started in there had a hiccup. I think Silicon Valley Bank, crapped out, and a couple other things happened that were part of a larger, issue. What do you think that was all about? And then kind of how does that, that's kind of another thread we got to pull on, right? To figure out how this all gets unwound again. Which is another multidimensional problem, right? Depending on the angle that you come at it from. Mm-hmm.
So venture capital does its thing, mm-hmm. right? It forms companies, and it has an expectation that we're going to be able to exit by a certain point in time, right? And sell it forward. Again, I'm not making a value judgment, and we're going to get our return, and then we're going to take that money, turn it to our LPs, raise the next fund, and go start and do the process again. And a funny thing happens on the way to trying to do all that, in that capital markets and the IPO markets kind of stop, right? So one of the natural avenues for exit goes into pause mode.
IPO, right?
Okay. Or IPO, right? So the private equity firms, which are more in certain sectors, would be more natural IPO vehicles because they're later stage companies with revenues and EBITDA and all those good things. But they're the ones who might buy the company from the VC companies because they're out of the hyper growth stage into a growth stage, and then they want to sell it. So the whole pipeline clogs up. And again, what was the bet? The bet was, when the Fed started to ease and money became easier and cheaper, maybe we don't go back to zero interest rates, that the machine starts up again, right? Wall Street was gearing up for M&A activity, for IPO activity, and it starts to thaw a little last August, September, and then the Fed doesn't go on a protracted, predictable program of reducing interest rates, and the whole thing stops again. Right. So we've gotten a couple of ish IPOs since then. Birkenstock brand name. We all wear them. We all like them, or at least we tell ourselves we're supposed to like ugly shoes or ugly sandals. I think they're great and they're comfortable, but
very comfy. Yeah, for sure.
Right. But Core Weave tries to come public, 2 weeks ago, and kind of was initially a flop. And certainly in terms of the amount of money they wanted to raise, and you sort of got everything in between. So we also know from studies that have been done that there's a large number of companies, like I thought the number's like 20 plus thousand, I think, some crazy number that should have transacted by now across
20,000.
I think it's something like that.
Wow.
I apologize if I have an extra zero, but even if it's 2,000,
that's a lot.
The whole system's clogged.
So why? So what's preventing those companies from? Was just bad timing, or just wait a little bit?
And they're overvalued.
Overvalued.
Right? From studies because private money gets to set the value.
Okay.
And studies I could dig out say that something like a third to 40% of them are overvalued by at least a third. So the carrying value in the portfolio is too high. No one wants to mark down.
So there's a reset that has to happen.
So, right. So again, interest rates go down, the denominator falls, the value, you get closer to where you're carrying it. But who wants to sell at a loss?
So if money gets cheaper, then that could be part of it.
It
right?
helps ease the pressure off of valuations.
Okay. And then there's the more money that's floating around the economy, the cheaper things get. Right. And then so therefore the valuation could float up a little bit relative to other things based on that. Okay. So it sounds like interest rates is a big
sell, because then you can tell your LP, I got my 28.3% internal rate of return that I've been showing you.
Right.
Which I couldn't get if I have to sell it. So I can justify you giving me more money to do the game again.
Yeah, looking at the year-end fund, metrics, like some of the things I'm in, it's like, oh man, how's this ever gonna, make any money? And I think, in a microcosm, I'm a little fish investor, but imagine you're California or some big state like New York that has pensions. Has to deploy the money to get a return in excess of the hurdle rate, of the T-bills or whatever. How the heck are you going to do that?
Excess return because they're underfunded pensions to make the fact that the contributions weren't enough. And on top of it, they haven't gotten the cash that they thought they were going to get by now. Mm-hmm. Right. So they could pay because they have, pensions are actuarially based. And then if I'm a VC trying to raise my next fund, they haven't gotten the cash back, so they can't roll it forward into fund number 7 or whatever the number they're up to, right? So it's and maybe the other thing is people had it too easy for too long with zero interest rates, and they don't know how to function in a 4% treasury environment. Yeah. It's much easier to do all this when they're 35 basis points or 50 basis points. Right.
Well, I had a discussion. I had dinner with a guy yesterday, and he was a older wealthy person in a certain industry, and we're talking about a certain company in that industry. And he said, "Yeah, I was really gonna, I was thinking about throwing some money in, 5 or 6 digits into this private company, early stage. But man, the stock market today, the wealth effect is real, right? So just on the margin, he was sitting there having a beer, going from." Yeah, I'm going to invest to, I don't know, green light to red or yellow light.
That's the side.
Well, and that's what's going on all over the place, right? It's easier just to hang.
Whereas the flip side is right now is the exact probably time you should make that investment, because if it looked good a week ago, it looks better today. The private investments look better today than the public investments do.
Okay, so let's talk about that.
What's willing to bet on that?
What is the end of all this? What is the the dip in the curve? What does the inflection point have to look like here? Or what do you think?
I saw a statistic yesterday or this morning that 20% of U.S. equities are owned by foreigners.
20% are owned by foreigners, including governments.
Equities are by foreigners. No, It could be foreign pension funds. It could be foreign asset managers. It could probably less so sovereign wealth funds. They tend to be more private investors. Okay. So now And okay, so this is where my international trade and money economics is a little rusty. But bear with me. The Fed has now another problem. Here we go. Are they going to bail out Wall Street or Main Street? You would argue if you want to bring manufacturing back to the US, you got to weaken the dollar, right? Because our relative costs are high with a strong dollar. We're the world's reserve currency, that makes sense. If I'm the Fed and I cut interest rates to try and help Wall Street, I now weaken the dollar. I weaken the dollar, right? Because if I hold net, and if I'm a foreign investor, I think in FX adjusted return terms. So if I'm a euro investor and I'm investing in dollars, I got to buy dollars to make the investment. If my euro is strengthening to the dollar, if I have the math right, don't hold me. Right. Then my US dollar denominated financial asset return looks weaker because I'm not benefiting from the currency change, right? Because if the dollar gets stronger, it buys more euros when I make the translation back into euros, right? So now I've lost that part of the treadmill that's helped me out. So a lot of people, not just me, are worried that foreign investors are going to putting aside that by all accounts, they're very angry right now, that they're on net going to take money out of the US equity markets and move it into their markets.
Yeah.
And on top of that, into buying their domestic companies that can operate tariff-free inside Europe.
Yeah, I was talking to
the US, right? So you get this big rotational shift in things. And if that's the case, and look, let's be candid, profit margins before this happened in corporations are at an all-time high. So they can't get better, right? Top line growth was getting harder to achieve. Financial engineering was driving earnings per share.
Mm-hmm.
Back to late business cycle kind of stuff. So what do you need to keep the market continuing to go up? You need the discount rate to fall. What does that mean? The Fed has to cut interest rates. If the Fed's not going to do that, valuations, which a lot of people, including me, think would be not, the market wasn't cheap, right? Because the US market's gone up relative to everything else until this happened. So you see a valuation correction, and I don't know. And then I'm not going to put a number out because all I'm going to do is make people mad at me because I'll be wrong. But it will be a meaningful number.
Okay, yeah. So right? You've seen a couple business cycles. Which one is this most like that you've seen in the past?
None, because this is completely self-inflicted.
It's a weird one, right? It's just a sum of a lot of things that have to get flushed out.
The post-World War II business cycle basically plays out largely the same, right? Particularly when we deregulate banking, so now central banks become pretty important in the 80s going forward. But basically the economy, the central bank gets concerned that the economy is getting too hot. The central bank wants to slow the economy down. The central bank raises interest rates. Economically sensitive sectors slow, construction, housing, things like that. Now, we didn't have credit cards in the 50s, 60s, early 70s right? But so they slow things down. They get them slowed down enough. They bring interest rates back down. Interest rate sensitive sectors of the economy come back first, right? Housing construction, building construction resumes. They start hiring people, and away we go. Now we have something where we can't look at, say, this is, like those recessions. Well, we had a COVID recession, right? That was different. And what did we do? We threw a lot of money at it, which I think was the right thing to do.
Inflation, yeah.
But you can't stop a $20 trillion economy cold in its tracks. Reconfigure everything, shut down institutions, and then not have dislocations occur. We just call that rent inflation.
Right.
And would the better alternative to have people starve?
Yeah, right. Exactly.
Right. And it's easy to say in hindsight that it caused it. We didn't know how bad COVID was going to be, but it got people really scared in March of 2020 and April of 2020. People were dying, I'm a New Yorker. Our hospitals and morgues were overflowing with bodies at that point, where there were no hospital beds. My friends who were doctors said we can't get lung equipment to help people breathe. We didn't have a vaccine yet. And what a modern miracle of science. We should be celebrating the fact that we came up with these vaccines that probably saved millions of lives. But the GFC, we at least sort of knew what to do in the GFC. We had to buy financial assets that emanated out of a zero interest rate environment that were never AAA, got treated as though they were AAA, and surprise, surprise, they turn out to be not to be AAA. So quantitative easing, the Fed just put them on their balance sheet, right? But again, it bailed out Wall Street, not Main Street. So, but we've never had a late in a business cycle, let's impose a giant tax on the economy recession.
So if other parts of the tax structure move or get brought down, is that going to work? I guess that'll work for some people and not work for others.
Exactly. Right. So if we know, I'll get the number along, that certainly up to like $80,000 a year of disposable income, people spend it all. Right. That's food, housing, car, kids, medicine. They save very little. So even if they got a 25% reduction in their taxes, it doesn't give them, they're going to spend that money, right? It goes right into buying stuff because they need it. If you have it, again, I'm not trying to, I have personal views on what I like to see happen, but all I'm saying is you're writing a piece of software, you're writing a set of rules that will produce an outcome. If you give the top 10% in the economy more money, they have to do something with it. Well, they don't need another home. What do? They buy financial assets, NFTs, bananas taped to a wall for $6 million, right? Because they have to do something with the money. But mostly they buy financial assets. What does that do? It causes inflation of financial assets. Well, when we see the stock market inflate, because it's not driven by corporate growth, corporate earnings, and things like that, it's driven by people just have to buy stuff. We don't complain about that. We like it when the stock market goes up, right? So let's go back to the late 90s. Think about it. Really interesting thing happened. We started running a budget surplus at the federal level. Everyone said, this is good. This is virtuous. It shows that we're being responsible. What are we really doing? We're removing money out of the economy. Where does ultimately that money have to come from? Again, that proverbial family of four that's just working middle class, working day to day. It's not coming from them. It's coming from the upper wealth tiers of the economy who now do not have net new cash to put into financial assets. So part of the .com, I would argue part of the .com correction was, a lot of those businesses weren't businesses, but part of it was there was no new money coming into the market to keep pushing those stock prices up. And they relied on stock prices and stock issuance as one of their big funding, the publicly traded ones as one of their big funding mechanisms, right? So you've now taken that away because you're net removing money from the system. So now, again, that if you have, and right, so it's the change in the tax regime. If we stick with the current tax regime, which we know is set to expire, then it's not adding new money to the system on net, right? It's holding, if you will, the money supply, velocity money, and all those good things that economists like to talk about, kind of the same. If you cut the taxes yet again by hundreds of billions of dollars a year, you've given that part of the citizenry money to spend on buying financial assets.
Mm-hmm. And capital formation.
Yep. Right. So think about one other thing that tariffs have done, which I don't think is getting enough attention. From a corporation's perspective, they also just faced a huge tax increase. Apple, just picking on Apple, we know that they run the bulk of their profits through a tax haven domicile in Ireland, and they don't pay taxes on it. What did we just do? We just put a tax on Apple, a corporate tax on Apple.
Okay.
Right? We've reduced corporate profitability for companies who are doing things like that. What does that do? That's less incremental money that they can use to repurchase their stock.
Okay. So stock prices not so great.
Are reflecting the fact that net profit margins are going to look different because, well, putting aside, right, because yes, they have a deferred tax asset. They're going to have to start paying, they potentially have to start paying cash taxes that they've not been paying. And we can go dig into footnotes in a SEC filing and get, and lose the audience. But that's also part of what's going on is it's not just that they make their stuff all over the world, which, oh, by the way, we wrote a software code that told them to do that.
Right. Be global.
Right.
Figure it out.
We told all corporations, run an ecosystem, not run a homogeneous, vertically integrated economic system in your own country. But we've just reduced their profit margin and the amount of excess cash they'll be able to generate going forward if these things stay in place. Not unique to Apple. It's just people are familiar with the story of Apple domiciling their profits in Ireland.
Let's look at the other side of the equation. Companies like, you see Joann's Fabric is going bankrupt again, but for real this time. No, I think, so they're definitely liquidating this time. No reorg.
Did you see, what is it, RH, the furniture guy?
Okay. What happened there?
Fell 25% or something like that in the first hour of training, and he was on an earnings conference call, and they literally said, "Oh,
gotta go." Oh, no kidding.
Yeah, because and I think it ended up down 40% yesterday or something like that.
That's crazy.
Yeah.
Well, there's definitely something going on. Corporate leadership at all kinds of different phases of growth. Sizes of companies are a little bit freaked out and on pause, wait and see. For the most part, I think, you look structurally at jobs, lots of layoffs in the news, lots right. of companies going out that have been institutions, on bricks and mortar basis, but also tech and, lots of other places. You see, you look at federal government, there's definitely a downsizing going on there. You look at the last couple of years, jobs have been fairly steady, but you look at you dig into which jobs, it was all government jobs.
No, yeah.
Well, a lot of government jobs.
Employment's been slowly shrinking for a long time at the federal level. Again, at the federal level, but
I think this is a shock event, right. In that employment arena. I don't know how long. I can't get a good read. I talked to a couple of people in DC this last week, and they said, we're getting laid off, but not for a while. So nobody's really acting. But then you talk to other people and it's like, oh my God, we're losing all our contracts in the consulting world. So
I'm not going to lose sleep over that one person.
Okay. Well, it's so you don't want anybody to lose business or lose a job, but it is a shock economically. What are all those people going to do? And then surely that's a boat anchor on the economy or economic development. How does all that get unwound? Does the government, government doesn't all of a sudden start do anything usually. So what's going to happen to DC and places like that? A lot of these government jobs aren't there anymore. But a lot of big companies, are laying off, downsizing 10, 20, 30, 40, 50%, some of them. Where is that? You think that's not just like AI and everybody's more efficient, right? This is something else.
There's an alignment of surveys and behavior that are telling us that the headline number of unemployment and how people feel about their employment are not in sync. Right? If we said, we've had protracted U3 unemployment in the 3.5-4% for a couple of years, you would think employees would be feeling pretty good. And even we've known for months that, right, people be feeling comfortable about switching jobs. That stopped, right? That's a really important economic indicator, which is people will choose a bird in the hand over potentially something better in the bush, right? That's the uncertainty effect. The NIFB survey of capital spending by small businesses fell drastically in the February reading. It looked like the beginning of COVID. Well, that's a problem because small businesses, which are where the growth is, are the hirers of tomorrow. So if they're not going to spend money, they're not going to hire, right? So here we go. It's like we're removing a segment of the natural process of the business cycle out of the process, and then we're putting some external shock, and we don't know the magnitude of the shock yet, onto the system, right? If the federal government says, whether rightly or wrongly, we're going to let 500,000 people or 1 million people, put them on the unemployment rolls who have a particular set of skills that aren't necessary because we've told them we want you to have these skills, and they're all over the country, even if we think a lot of it's concentrated in DC.
That's true.
Fair. Where do people go? Right. I used to work in a national park in Utah, and they just and then in some of these things, right, you get a secondary and tertiary, a multiplier effect, right? Because if now we can't have as many people go into national parks or things like that, and then in a lot of towns around national parks, their economic livelihood is dependent on the tourism for the national park, right? So you get a multiplier around it. We know airlines have cut back on their summer expectations for travel. We know foreigners are cutting back on coming to the U.S. So, but your point's well taken, which is we don't have the closest thing we might have to this, but it was so different, was the end of World War II, where we had 5.5 million GIs coming home, and we had to have something for them to do, places to live. We had to feed them. We had to get them jobs. We had to get them educated, right? Because you could think of them as government employees, all of a sudden unemployed, right? And we had a mini recession, 46, 47. Then we passed rule set. We put in software into our economy that said, we're going to support housing construction. We're going to have the GI Bill to educate them. We're going to support manufacturing growth because we have to employ all those people, and the secondary people and the tertiary people who are coming out of and we have to transition our factories from making airplanes and tanks back to making cars and washing machines, right? So we wrote rules to do that, and it worked, right? And then for a long period of time, we had this really, really the greatest period of reported GDP growth in the United States, 1950s, because we also get new household formation. We were having babies, and so we needed bigger houses and more washing machines and refrigerators. We don't know. No one sort of articulated a vision. Well, this is where it's where we want to get to. So you can say, will that rule set get us there? Right? So we have all this noise, and I think on net that makes people more uncomfortable, and there's a lot of people who are uncomfortable speaking in public that otherwise might be speaking in public right now, who are just choosing not to answer questions because of the way our media ecosystems work. So if they say, look, I just think what we're doing, let's say a CEO of a major bank came out and said, I think what we're doing is probably going to cause a recession and it's going to be bad.
Yeah, there's no, say
right. Say it.
Yeah.
And it's almost like people are self-censoring, or if Larry Fink, right, one of the biggest asset managers in the world, came out and said, wait a minute, this, because they were one of the big pushers into we should invest in renewables and alternative energy because of climate change. And now there's no incentive to voice your opinion in the public square. So people aren't hearing from the people we would otherwise think is our informal leaders what might be doing. We haven't seen the CEO of Stellantis, General Motors, or Chrysler come into Ford, get on CNBC and say, this is what this will do to our business. And Stellantis has shut factories, but the others can't be far behind because we now can't get parts. So the cost of manufacturing has gone up. It's going to hurt employment. Okay, so direct employment goes down, auto part employment goes down, the communities surrounding those auto part manufacturers goes, right, the local main street in those little towns is affected. And to say, well, in 3 years, we're going to have moved. So we're making 85% of assembling 85% of our cars on shore. That's cold comfort to people while they're going through all this. And if I'm an executive, I'm facing a multi-billion-dollar investment decision for a factory that's going to have to last me 15, 20, 30 years. And I'm going to say, wait a minute, but in 2 years, this whole thing may just change. How do I make investment decisions of that magnitude and that duration?
Right. I think one thing's clear, somebody's going to have to start some new activity, right? Entrepreneurship has to lead us out. So we have to start new initiatives, either, new manufacturing, new sectors, new something, new software technology businesses, new real estate businesses, all the above. Somebody's got to fix the toilets. Somebody's got to plumb the electric wires through the house. These are all economic activities. And then I think if I look at the tech ecosystem, it's very difficult to raise money on that second round. We used to call it Series A. I'm not sure what they call it now. Maybe it's a seed, or I don't know.
Seed plus.
Yeah, I don't know. It's so you raise a little bit of money from your friends and family. I think there's still people that'll put money behind their friends and family, capital efficient startups, whatever that is, right? Figure that out. Start to turn revenue quickly, right? So not that many moonshots, because you can't risk it right now. There's no room for mulligans in this economy. And then, I saw a thing go by where they call it, what's it called? Seed strapping, where people are now getting real funny because entrepreneurs are just going, yeah, we'll raise a safe round, which is, convertible
it's
debt.
in vogue way.
And it never converts because, hey, we don't want to grow unicorn status. We're just going to have a lifestyle business. And then you keep these people, and it's a liquidity problem, kind of like you were talking about on another scale. But I think people are starting to think through, okay, how can we do this fairly, and then determine a valuation later, even if you don't take another round of money, or, time bound or something, so you see the juices of creativity in the entrepreneur sector and financing. It's all kind of related.
So isn't that the silver lining in this, we hope? So we suffer from survivor bias.
Yeah,
right?
For sure.
So it's really easy to see like Intel and Microsoft after it happens, right? Because we don't know if all the guys and Apple in the right when they come out with the Mac, because we don't know who is to who. We saw a lot of it in COVID, right? People weren't left corporate kind of normal jobs, and they started all kinds of interesting businesses. So Etsy then takes off, right, in their garages. So here's my one bet is it isn't going to be, history tells us that the incumbent large companies are not the ones that create the next new thing.
Yes.
Even if they try and create barriers to it happen through monopolization, oligopolization, making the capital ante be $1 billion, things like that. What we don't know is who is the Steve Jobs and Wozniak in a garage playing with parts, coming up with something? Who's the Henry Ford coming up with something that looks so obvious after the fact and creates potentially a whole new industry with mass employment associated with it, that 5 years from now we'll look back and go, of course that made sense, right? It was so obvious. It's so obvious to see after it happened. And I think the great hope in all of this is that we've had these cycles of entrepreneurialism in the United States repeatedly occur, right? Because again, memory of, we don't educate people real well, but people don't remember the Depression of the 1880s. It was horrible. It was as bad, if not worse, of the 1930s, right? And every railroad went bust, but out of that emerges U.S. Steel. Out of that emerges, Georgia Pacific. Out of that right? But you had to build the stuff first so that things like that could happen. And then you could have the growth of the steel industry. And you couldn't have, again, I just know a lot about the steel industry. But we talk about technology today and we think of it as computers and software and the internet and AI. But think about the technology of the day, which is, oh my God, now there's this thing called the Bessemer furnace. Oh, now we have this thing called the open hearth. Oh, now we have this thing called the basic oxygen furnace. Because you don't have plentiful, cheap hydrocarbons and you don't have steel. You don't have an industrial revolution. But you couldn't go to 1850 and say this was going to happen. It was iron, right? And it happened. So maybe the hope in all this is someone will get some kids coming out of, Georgia Tech, I don't know, and it's going to say, I don't want to work for one of those companies. I'm going to go into my garage because I got an idea.
It's interesting. I'm doing a couple mentor programs, pitch competitions for the university crowd. So associated with an investment organization. So somebody was commenting over the last 2 years, it's not all tech. It's not another app. You're seeing, hey, I'm going to have a lifestyle resort. Hey, I'm going to do a cooking channel or a catering kitchen. People are starting really basic businesses and getting traction. And it was kind of interesting and refreshing. Yes, you have a couple medical devices. Yes, you have a couple software companies, but they're not doing like, hey, we're going to be the Uber for whatever. It's no, I'm going to write this little bit of software that's going to help a couple nurses do their job a little better. And, we're charging $59.95 a month, and people are buying it. They're like, oh, okay. This is kind of fun. But
I don't know the answer to this question off the top of my head, but what is McDonald's annual domestic sales, right? It's some ridiculous number, right? So when Ray Kroc sold a milkshake machine to a bunch of guys with a stand outside of Chicago where the whole thing started, could you have ever looked at that and said it's going to have $100 billion with sales? So we can look it up quick, right? But you couldn't look at it at that time. And for one of the most prominent tech companies, I know some, which I don't want to use their name because I don't want to cause a problem, but I know people who worked for a very prominent former CEO who's associated with having created it. Okay. And I asked these guys, they're very senior. They since left. They said, did that person know it was going to turn into what it would turn into at the time it did it? They said, no.
No. It's just a good thing.
It was just right thing at the right time. It nearly, even when it was a big prominent name, it nearly failed a couple of times, and economic conditions, or they had to transition the business, or they needed to develop new skills to turn into one of the most prominent corporations in the US 20 years later.
So my family has quick serve restaurant franchises. Not that one, but different ones. And so we talk about this a lot, so you make the money on the dirt, not necessarily on the franchise. Yeah. And then so McDonald's, is a classic, hey, you're not in the burger business, you're in the real estate business. So, you look at commercial real estate right now, it's another kind of major shock to the system from 5-6 years ago. And, how does all that get unwound? We're looking around our little small town where my dad still is, and he's going, man, I don't understand why people are paying that much for that dirt. And then over and over and over again, where's all this stupid money coming from? And then what game are they playing? So there's a lot of weird economic, like either he doesn't understand the economy, which I don't think is true, or somebody else is like just spraying and praying, or there's some kind of weird greater fool theory, going on.
Or there's another option, which is debt increases fixed asset prices.
Okay. So it's harder to get the dirt at any price.
There's more debt available. People can use more of the debt to buy homes. Home prices go up.
Money's cheaper. Stuff is cheaper.
If I can borrow more money, I can afford to go to college. The colleges can raise the prices, right? On a real basis, relative to what I paid to go to undergraduate, relative to what it costs today. I'm like, huh? Right? But it's because it's all done with debt.
Sure.
Right. So what is commercial real estate? We've increased the leverage underneath it throughout the system. It increases asset prices. The asset prices increase, either you're buying it or your lease rates just went up.
And you can't sell it because you're highly leveraged. And
if the market pauses, right, you're stuck.
Yeah.
Maybe again, so people should learn what a debt jubilee is.
Debt jubilee. Okay. That's like a old school
times.
Okay.
We should have, in 2009, had a debt jubilee. What is a debt jubilee? Just cancel it all of it. Right. So then you restore loan to values back to reasonable levels. Right. People aren't just running to stand still to service debt. Right. So I tell this really interesting story. There's a longer component to it, but the part that matters is I work for very close friends owned a medium-sized supermarket chain in the Northeast. And actually, the guy who becomes the CEO, this is a true story, is responsible for the fact that we have barcoding. That is a verifiable story with a great twist in it. So I needed a summer job in high school. I worked in the supermarket. So look at a supermarket and the store manager, the produce manager, the meat manager on Long Island, not the cheapest place in the world, could own a house, send their kids to college, live in a nice community, take their vacation every year. It was they could have a middle-class existence working in a supermarket. Mm-hmm. Can't do that now.
On one income. On one income. Right.
So, because now the amount of debt service that people have to service, because we told people borrow more money, you can live a better lifestyle. So instead of real income going up, we said borrow more, and we reached lever up, and we've reached the end of that kind of ability for the middle class to play that game. So it goes back to sort of when we're thinking commercial real estate, we're not talking like tall buildings in Midtown Manhattan. We're talking, Main Street kind of commercial real estate.
4-story Class A, office space kind of.
And it's levered up.
Yeah.
So then they got to service the debt. You got to service the debt, or it's collateralized into an instrument, and you got to service that instrument, and now tenants have to pay for it. So it's just increased the cost. And that's one of the reasons why the U.S. is a high cost. They call it finance, insurance, and real estate. We are an expensive place because of those sectors to do business, because they take, I got to use an economic word, they take rent out of the system. And by the way, insurance rates are going up because of climate change and losses and storms and all those kinds of things.
Yeah,
right?
Yeah.
Different issue.
Yeah.
People living in Florida, why? My insurance cost is too high relative to my mortgage. I can't afford it. Buy. Right?
Right. Yeah. Well, my cousin's a realtor in Sarasota, and he was saying, locally, there's a lot of people exiting the economy down there for a lot of reasons.
I'm in Sarasota.
Yeah. Okay.
So
small world.
World after world.
Yeah. So tell her to hang on to her house. Not the year.
Now she's been in a planned community for a few years when she had to give up driving. She's elderly, and has a great situation, and it's a really good setup. And she just wants to get her sons and grandkids to come visit her more often. And we keep telling her it's too hot and humid in Florida. Forget it, Mom. See how,
So you had a really cool story I want to get in here at the end. You said something to me one time where you were talking about the skill set needed early career versus late career. You said something that was kind of cool. Early, it's about the technical execution skills, and at some point you cross the boundary, and it's all about the politics. And the bigger the company, the more politics. Everybody kind of, always bitches and moans about politics. But so you want to talk about that for a second?
Yeah. If I can't draw it on the screen, but if people thought about two equilateral triangles, right? So early in your career, you a lot of the things you do are about your sort of technical skills, in a broad sense of the word, technical skills, right? Or your ability to do things. And you don't need a lot of political skills to exist in an organization. And we shouldn't view politics necessarily as a bad word. As soon as you put two people in a room, we have politics. We're human beings. We're social animals. But over time, advancing becomes less about in my view, the technical skills and more about the political skills. And I think one of the things that what made me think about this was Steve Jobs, right? So Steve Jobs was running this big multi-billion-dollar corporation, yet he never let go of the fundamental parts of the technology in terms of how they were designed, how they worked. He wasn't sitting in an office tower 2,000 miles away from where things were happening. His technical skills remained very strong. And I think that was one of the reasons that Apple was able to innovate sort of all these products, which were mostly evolutionary anyway, because he could still do both. And very
rare, right? Very rare.
And I think it's too rare. For those of us who are old enough, there was a TV show called TV Nation or something like that. And by Michael Moore. It was kind of funny. And he stands out of the Colgate Palmolive building and says, I can't remember with CEOs, can you come down, show me how you get the toothpaste into the tube?
Okay.
And he challenges the then CEO of Ford, can you change the oil in a car? And he took him up on it and showed that he could do it. Well, again, so if you lose touch, maybe the message in here is, if you lose touch with the core business that your business is really in, manufacturing and making cars work, or or selling consumer products or making loans. How many CEOs of banks actually know how originating loans really function anymore, right? Because they've been so far away from it for so long, or how if you're an American Express, how your customers really use your piece of plastic these days, right? And so what struck me again, where I came up with that sort of little simple model was thinking about Steve Jobs and the fact that we associated the technology as much with him as with the corporation. And I don't think that was false, and I don't think that was an accident. So don't lose sight of what your company really does and what you really need to do, because you want to advance up the corporate ladder. And I think that would produce a better class of CEOs and corporate executives, right? Or sales guys. Who was a guy who founded Southwest Airlines? Is it Kellerman? Or Kelleher? And he still sat in the plane. He didn't sit in he didn't fly in a private plane. He sat in the plane with customers. He experienced what their product was. So he could go back and say, hey, we got people who are unhappy because we need to fix this, right? It took us too long to push away from the gate. Right? So he knew how the product fundamentally functioned, and he could do both. And I think that's the lesson that I would urge people to take away from that.
So I have this theory that's kind of interesting. It dovetails into what you're talking about. I believe that as you go up the growth curve, and this is based on academic research, your different skill sets are needed to get you up in different parts of the build. So, very focused individual contributor, very talented, high risk, high reward, and then there's a second gear where, hey, you're building the infrastructure, you're building the policy, procedure, systems, you're still building. Can't be a cowboy. And then so now that kind of aligns with you've gone from technical or individual execution to people organizational skills, right? And then at some point, you kind of shift into this late stage, just don't screw up, protect the monopoly,
right?
Just advance it a little bit. Hey, we got a good thing going here. Just keep it going, right? And then just up and to the right, just a little bit. Don't do it all in one quarter. And manage steady, right? And then so that kind of transforms into a lot of people skills. You'd call it political type of skills, right? And politics has got a nasty tone to it, right?
So, I'm not trying to suggest that at all. But
it's there's a lot of complex interaction at a very large organization where there's a lot, at the C level. I think a lot of people don't get to see that, but there's a lot of trade-offs all the time. A lot of involvement, a lot of, why does it take so long for Apple to come out with a new product, or Ford, or, whatever? Well, there's a lot going on, right? And then everything has a trade-off because you're into everything. It's not so simple.
Many years, probably 10, 12 years after I got my MBA, I was sitting with the dean of my business school. Right? I said, look, let's be honest about something. I could take an MBA education, and I could probably get the whole thing into a 55-page PowerPoint deck. And he kind of stares at me and goes, well, I said, no. What's the real value of going to business school? Learning how to work with people who you wouldn't necessarily choose to work with of your own free will. Because that's how the real world of business is.
Yeah.
Right?
Yeah.
How to work with people. I don't want to work with Todd. Right? Why would I want to work with Todd? He doesn't.
Oh, man. Yeah.
And it's all those little compromises, which are none. I'm not saying that's not a bad thing.
Right. You have to coexist and move forward.
Yeah, right.
And sales hates engineering, hates marketing, hates the lawyers, hates the whatever, right? Or, not hates, but doesn't enjoy working with because it's at odds to progress.
I just want to sell. I want to sell. Why can't manufacturing deliver at a time? Well, but you know what I'm saying? We have these other problems that we have to deal with. And a lot of times what are senior managers doing? They're playing referees or marriage counselors.
Yeah, right.
Trying to get the natural tensions in an organization to coexist with each other.
Sure. Yeah. Yeah, that's sage advice. Well, just wrap it up, Michael. You're a traveling man. I know you've got some really awesome travel stories to share. Can you pick one for us and maybe share that with us?
Yeah. So I thought about which one to use because, like you said, I've traveled a lot in my career, and I think I settled on the following one. So I had a 4-month-old daughter, and I was working as a management consultant in Boston, and I was working for one of the more prominent companies from India, and the phone rings, and am I allowed to name names?
Sure, why not?
So Ratan Tata.
Okay.
I could have lunch with you in Paris tomorrow.
Oh, okay. Yes, sir.
Like all good consultants, there was a thing called a garment bag in those days that we could travel with. This was probably 1991 or 90 or something like that. And I called. My wife said, because it was my anniversary. I said, our anniversary dinner tomorrow night? And she goes, yeah. I said, you might want to cancel it. She goes, why? I'm going to Paris. You're going? Sorry, I got to get on a plane. So I fly to Paris. And we have this great lunch. And this is where the fun part of the story kind of really starts. And so it's like probably 2:33, and I had to get back to de Gaulle from downtown central Paris to get a plane, an Air France plane to connect to an American Airlines plane in London to get back onto the East Coast of the United States for a business meeting the next day. And I said, it's right in that time zone where I'll take the metro because it may not be faster, but it's predictable.
Sure.
Right? Yeah. And I'm not going to hop in a cab. So my luck, as you can see de Gaulle, and there's a problem, and we sit there, and I'm like, now I'm starting to look at my watch. And I get out of the train, and I get into the interterminal bus, and I don't remember all the terminal letters in de Gaulle, and we get to Terminal E, and I'm trying to get to G, which is like around a loop. And I said to the bus driver, and he's just sitting there. I said, can we go? I'm trying to catch my plane. He goes, we will go when we will go. And if it says anything else, we're definitely not going. So I finally get to my terminal, and I go running through the door with my briefcase and my full-size garment bag, and I emigrate out of the country, and I go walking up to the gate really quickly, and there's my plane sitting there attached to the jetway, and I probably had 30, 35 minutes to spare. And he said, here's my ticket. There were these things called paper tickets in those days. The gate attendant says, you weren't here 45 minutes before the flight. You can't board the flight. I said, it's sitting right there. It's not going anywhere for another half hour. You're here in time. You're not boarding the flight. I said, well, who do I talk to? I want to try and get back to the U.S. And I go, talk to that guy over there. So I pick up my bag, and I go over to this guy who's sitting typing something into a terminal. I said, can you help me? He goes, when I'm done with what I'm doing, I will help you. And I said, yep. Okay. I cue the Jeopardy music. Da, 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 da. I said, I need to get back to the U.S. tonight. And he types into his terminal. He says, British Airways has a flight going out of terminal whatever, which is the octopus-like terminal that can get you to London, that can get you on a BA flight back to, I can't remember if it was going to New York or Boston. I said, okay. I go, now I have to emigrate back into France.
Oh, yeah. Oh, great.
And as I go coming out the door of the terminal, there goes the interterminal bus.
Right. Wonderful.
Damn.
Yeah.
I hop in a cab and said, take me to terminal, I can't remember the letter. And the guy starts grousing. And I said, look, I'm going to give you the same amount of money in francs that you would get as though you were taking me to central Paris. And I know that the way the system works, because you're just taking me from one terminal to another, you get back at the front of the line anyway. So just shut up and drive.
Oh, God.
And I didn't want to be rude, but so I go rushing into the British Airways terminal. I go up to the counter, and I say to the guy, can I get back to the States tonight? And he goes to his computer, and he says, yep. And I said, great. Book. He said, we have one more business class seat left out of London. I go, terrific. I'm not going to be crammed in the back of the plane. And, and I hand him my American Airlines ticket. And he goes, oh. I said, oh, what? He goes, well, again, people who weren't around those days, people like me remember the computer systems didn't talk to each other. Because I have to call American and get permission to transfer this ticket to a British Airways ticket. I said, stop right there. And he goes, what? I go, how long before the plane to London leaves do I have to be at the gate? Because if I have a time limit, I'm just going to buy a new ticket. When I get back to the States, I'll just return the ticket for a credit. It goes, oh, as long as you're there before we close the door, we don't care. So I said, fine. So we called American Airlines, and American Airlines said, of course, gave them the right code. And I got my British Airways seat, and I walked up to the British Airways flight, and I got on the plane, and I made it to London, and I made it back to the States, and unnecessarily hassled. And people should be really glad for the technologies that let all these things talk to themselves now, because there was a time it was all manual.
Yeah. Yeah.
That's my little story in the time we had, from just a fun snippet of no stress, a lot of stress, a lot of stress. I think I'll have a scotch sitting in my seat flying to London.
And then how did your wife take it when you came home?
Okay, so because I traveled as a consultant like 200 plus nights a year and racked up frequent flyer miles like, they were candy. And again, this is still paper tickets. I said, well, I call up American. Well, one of the things I used to do is I used to give my assistant 4 ticket vouchers for her holiday gift, because the last thing I wanted to do is get in an airplane. So I call up American, and I was in the first group of people ever to be platinum on American. So I call them up. I get 2 first-class tickets to Paris. And my wife had not, at that point, never been to Paris. And I put them in a drawer. They send me the nice American cardboard folder and the crappy paper ticket that was inside it. With it was like carbon paper.
Sure, yeah.
Right. And I put it in my underwear drawer where she would never go. And I come home from a business trip 4 or 5 months later, and she's upset about something. And look, she's new mom's. It's a lot of stress being a new mom. And I said, I wasn't going to tell her and I had arranged to fly my parents up, and they were going to take care of our daughter. Then we were going to go for her anniversary. So, exactly a year later. So I said, I'll let her know. And I hand her one of these ticket envelopes, and she opens it up and goes, "You're going to Paris again?" And I go, "Look at whose name is on the ticket." And she sees her name and then breaks out in tears. So,
nice.
that, and we had a great trip to Paris.
Very nice.
That's how. So it does sort of have a really, really happy ending and a very, very memorable trip for the two of us.
Wow.
And our first trip away from our daughter. So a toddler at that point.
Super memorable. And Paris is great, except for the airport. A lot of people don't like that airport.
Flying American in those days, you went to Orly. You didn't go to De Gaulle.
Oh, okay. Yeah. That would be better for sure. Wow.
Yeah. But now we're at the stage where all airports stink.
Yeah. Well, yeah, for sure. Well, Michael, it's been great having you on the show.
It's been a lot of fun.
How could people get in touch with you after this on the internet if they want to follow up on anything?
The easiest way to find me is go to techcxo.com and look at our people, and you'll find all my contact information there. And certainly would welcome people reaching out and continuing the dialogue in a different venue.
Well, great, Michael. Thanks.
And thanks, Todd. And have a great weekend.
Bye for now.
Bye.
Thanks for joining us in the Sky Lounge. Please like and subscribe to hear more from Tales from the Sky Lounge here and anywhere else you get your podcasts.